Hello and welcome to CNBC's Invest in Women Ready, Set, Grow Facebook Live. I'm CNBC's Leslie Picker. It is Women's Heritage Month, and we're going to spend the next hour focusing on female financial empowerment. Figuring out your finances can be stressful under the best of circumstances, but this past year has created new types of worries compounded by the pandemic. Women especially have had to make a lot of tough choices. 45% say they are the sole or primary financial decision maker in their home. That's according to a recent CNBC and Acorns Invest in You survey. And consider this, 2.3 million women have left the workforce since the start of the pandemic, bringing their labor participation rate to levels not seen since 1988, according to the National Women's Law Center. Women account for 53.8% of overall net job loss during COVID, and 58% said they were counting on or needed this latest round of stimulus payments versus 45% of men. So today we're taking your questions about women and money. Whether you are struggling to make ends meet, are worried about lack of savings, want to know how to handle your debt, or maybe you just want to be better prepared next time a crisis hits. We're going to cover it all. Just submit your questions below. Joining me today are three major experts who are here to help. Brittany Castro is a certified financial planner and founder and CEO of Financially Wise. Dr. Carolyn McClanahan is an MD and certified financial planner. She is the founder and director of financial planning at Life Planning Partners and a member of the CNBC Financial Advisors Council. And last but not least is Patrice Washington she holds a certificate in financial psychology. She is founder and CEO of Seek Wisdom, Find Wealth, author of Redefine Wealth for Yourself, and host of the Redefining Wealth podcast. Thank you all so much for being here today. Just to kind of kick things off, I want to start by asking each of you, what is the biggest financial challenge you see facing women right now? Let's start with you, Patrice.
Well, as you shared, Leslie, there's so many women who have been displaced from the workforce because of the pandemic. And so one issue that I found, especially in my community, is that women didn't know how to monetize their gifts, like use what they did have to create some type of income to support that loss. And so one big issue is just if you can't find a job, how can you take what you're already good at and create something that you can monetize in this gig economy?
Use that creativity. Carolyn, what would you advise?
Well, I think one of the issues that we're seeing is women, just by our nature, tend to be more of the caretakers. So everything has really fallen, a bunch has fallen on them during this pandemic. So they're having to take care of their parents. They're having to worry about homeschooling the kids. And we're seeing studies now that the women are dropping out of the workforce. And this breaks my heart because, how are they going to recover? So I encourage all women to, get your other half to pick up a little bit more, start using the village of your friends to help participate so everybody can continue to do everything that they can do to maintain their economic viability in the workforce going forward.
So important. Brittany, what would you say?
I would say that a lot of women are just not leveraging investing as much as they should be and can be. Actually, I just read a study that said women investors outperform male investors by 1%, but it's those that actually do invest. And I think right now, a lot of women control the wealth. A majority of America's wealth is in the hands of women. However, a lot of that is still in cash and liquid investments that are maybe not taking advantage of compounding interest, things that can grow your money like real estate or the stock market. And I think there's a huge opportunity for women to really understand investing, understand the risks, and set up their investment portfolio to grow their wealth so that they can have that income stream, because we all know women on average live longer than men. So there's this challenge of making sure we have income streams for our entire life, and investing is such a powerful way to do that.
That's a perfect curtain raiser for this discussion altogether, because we're going to get into all of those topics, help provide some tips for those of you out there listening on really how to kickstart investing and grow your wealth. Let's get to some of the questions from our audience. We've been collecting these over the last few weeks over social media. Our first question hits at a pretty basic money issue for a lot of people. Someone is asking for just advice for a 22-year-old on financial literacy. This problem, though, spans all age groups. Only 40% of women and 53% of men said they have an excellent or very good knowledge of personal finance. In our recent CNBC and Acorns Invest and Use survey, half the respondents said they had to teach themselves how to handle household finances. It's certainly not an easy subject, but Patrice, why do you think so many people lack basic financial literacy, and what can they be doing about it? Where should they even start trying to educate themselves?
Well, that's a loaded question, right? Because where does it start? I really believe it stems from the fact that basic personal finance education isn't mandatory in schools. You know, I don't know about you guys, but I learned a lot of things in school that I haven't necessarily had to use. But I don't care what you wanted to major in college or what your dream is. We all need to have these basic personal finance skills. Now, I will say this. We live in the information age where most things are really a Google search away. We're going to be honest, right? There's blogs, there's podcasts, there's so many books out there that focus on personal finance education. But in my work at Redefining Wealth, and as you noted, a certification in financial psychology, I really feel that many of us know the basics. We know that we should save at least 10% of our income. We know that we shouldn't get in over our heads with credit cards. We know that we should budget. But a lot of times I truly believe that there are other factors in our lives, like the way we manage or not manage the relationships in our lives, or, you know, any number of things that just keep us from being able to just do the things we already know to do. So I don't think it's about everyone becoming a money maven expert in anything in particular. I think that if you choose something in personal finance to really take hold of, whether it's saving or investing or real estate or debt elimination, the thing is, what is keeping you mentally stuck from being able to commit to it and do it consistently? And many of us, it's really a mindset thing. We didn't learn this in school. And unfortunately, a lot of parents weren't having very direct conversations about it. And we got some wrong messaging. And even in adulthood, it's holding us back.
It is pretty remarkable that it's not taught in school, but that's nice to hear that, you know, there is some sense, CENTS, in common sense, which at least should hopefully give people confidence to get started in learning more and building on that foundation. We have another question looking at, you know, some of the basic tenets, basic steps of managing your money well. So, you know, for those of you who have yet to really pick up a book or do a deep dive on the internet to get acclimated with personal finance and are tuning in today, Carolyn, what can you share with them about just some of the basic things to know about managing money?
Well, the first thing is you've got to take care of yourself first, and having that emergency fund. And I think the pandemic really showed that it's so important to have money in safe, even though it's not earning a lot, to have it in safe places like a money market account. So that's step one. And then step two is making certain you're insured adequately. People think about, start investing right off the bat, but they don't have their bases covered. So making certain you have the appropriate disability insurance and life insurance in place to protect yourself and your loved ones if something happened to you. And then you start with, where do I put my money? And that's a 401k. Make sure if you have one that you're at least saving enough to get the match. Then you have to decide, do I put it in Roth IRAs and my 401k? So having this stepwise approach about where you're going to put your money first. Then it's time to create what we call an investment policy statement. I think people invest money that they may need in the short term a little too aggressively. So making certain any money you're going to need in the short term needs to be in safe investments. And those things that you're using for the long term, so things that you're thinking about for retirement or a big purchase, many, many years down the road, 10, 20 years, then that you can be more aggressive with. And that should be invested in a diversified portfolio of ideally low-cost mutual funds, index funds. So learning about the basics first, and don't do anything fancy to start. All this thing you talk about day trading and trying to pick the best stocks. When you're just starting out, it's just important to be broad-based and not try to shoot for the moon.
That's a really good point. And especially, creating a delineation between the money you need, in a month or two and the money you might need in decades or more for your retirement. This kind of speaks to that whole idea of just a bucket of savings. The question from the user says that they're horrible at saving. So what is a way to start saving that is sustainable? Brittany, what would you recommend on this front?
Yeah, I would say, the only real way to save over time is to set it up automatically. I just think trying to do the old school, maybe philosophy of save anything left over never works. I've never seen it work in 15 years of working with clients. So you just have to start with a plan, identify what your cash flow or budget is, what your goals are. Like Carolyn was saying, it's very important to identify, are you saving for a short-term emergency fund? Or are you putting money into your long-term investment portfolio? Define what you're saving for and then just set it up automatically every month like it's a bill. And even if you start with something very small, look, let's talk. We can say $20 a month, $50 a month, whatever the number is, just start the system, because really that's what it's all about. And then over time, you do your reviews, your money reviews every quarter, every year, whatever it works for you, and figure out how do you increase it. Like, I always like to teach people to think about money like a game. Because really it is kind of a game, and at every level, like Patrice was saying, there's certain things you got to learn, like the mindset first, and then you go into like saving and getting the right income streams, and then you go into investing long-term and making sure you have the right insurance. But when you kind of like set up things automatically and work these systems, and you're just trying to get to the next level or improve your game every year, then it takes a lot of the stress out. Not that we want to gamify money, but I think you need to bring some lightness and some, more playful energy to your money situation, because it is a long-term relationship and it's never going to be perfect. And you might have the perfect plan in place and then something changes completely next year outside of your control that you have to like restart or reevaluate. So, it's just like kind of committing to this mindset that it's like a long-term strategy. Start with automatic savings, improve it, refine it, change it as you go through life.
As they say in the business, being long-term greedy is not a bad thing, knowing that eventually you will get to your goal, whatever it might be. This is a very interesting question, and I know it's one, especially in the pandemic, that has affected a lot of people. One user says, I want to get back to work, but nobody can take care of my infant. What do I do? So this isn't just about new mothers. So many women have really stopped working or had to reduce hours during the pandemic because they had to take care of their kids who were suddenly going to school virtually. So infants, toddlers, children, this is something that a lot of people have really had to grapple with. Carolyn, so, what would you advise for working mothers or prospective working mothers who are trying to figure out how to juggle it all?
This is such a tough situation. And I dream that one day we have social policies that help in this situation, because it does put women, to me, at the short end of the stick when it comes to childcare. And so first off, again, try to get your spouse more involved in helping with the childcare. Create co-ops with your friends to alternate childcare. And of course, you can now send kids back to daycare. They've shown as far, and so here, I guess if my doctor hat goes on just a little bit, that children going to daycare is not a big issue in the world of coronavirus. So, utilizing daycare again. Ideally, maybe you could have an in-house person come in while you're working to help take care of the kids. It's a tough situation. There's no really good answer for that. It's important, though, for women to try to get back into the workforce because we don't want them to lose their career viability going forward. So tough situation.
Yeah, and Carolyn, how should women be thinking about their earnings relative to how much money they're spending on childcare? Do you have any advice on that front with regard to the calculation of, how to think about paying for childcare versus how to ask for a certain earnings to cover that, the childcare that they're going to need to be paying for?
That's really important because especially in certain places, childcare is just very, very expensive. So you have to make sure that the job that you have is worth, the amount you're going to pay for childcare. And so talking to your employer, and larger employers, thankfully, a lot of times have benefits that'll help with that. There are childcare tax credits. There are programs that you can, contribute to your dependent care child fund at your job. So looking at the opportunities there, I can't say this enough, you guys are going to get sick of that. We need social change around women in the workforce. We need policy change to help support women in the workforce. Other countries do it, and we need to do it too. Not a good answer for those in the thick of it right now, but talking to your friends and creating co-ops together where you guys can help each other out with the childcare.
That's great advice. This kind of speaks to the same idea of, the calculus of getting back into the workforce and getting compensated, for that work that you're doing and all of the different trade-offs that you're making, especially as it pertains to the pandemic. The question is, how do you ask for a raise when it feels like you should just be lucky to have a job right now? Patrice, you recommend making a brag binder in order to really advocate for yourself.
I do, because before the pandemic, pre-COVID, I worked with so many women who did not like having this conversation. It was always tough for them. It was difficult to speak up, even though they were the types to come early, leave late, and go the extra mile. And so I got in the habit of really suggesting that my clients make a brag binder, because oftentimes they were feeling just too emotional about the conversation instead of understanding that they were worth it. And they had already proven they were worth it. But like many of us born to be nurturers, we just kind of are used to giving, and not always expecting in return. And so a brag binder is a really great way, whether you have a physical binder or a digital binder, where you can collect past reviews, thank yous from clients, emails that praised your participation on a project, or thank you for your involvement in some form or fashion, awards that you've gotten, any kudos, any accolades. I really suggest before you think about the promotion, going in to ask about the raise or the promotion, that you go through those things and remember who you are. Remember your value, remember your worth, and know that you deserve this. You're not just asking about it because we're in a pandemic. I'm sure many people who are thinking about asking for a raise or promotion knew that they deserved it well before the pandemic. And many people have had extra tasks and job responsibilities added to what they were already doing to help cover shortfall. And it's what you're worth. And so that brag binder will just remind you, hey, I'm not being selfish at all. As a matter of fact, I need to be able to sustain my family in a time where childcare is expensive, or there are other family members that maybe I have to pitch in for and contribute to because they're having a hard time. We can't do it if we're barely getting by, or if we're just not even at the level that we should be based on our skills, our talents, our tenure, and all those things. So the brag binder, I use it to this day. Before I negotiate a deal, even as an entrepreneur, I go back and read the feedback from my clients and from past, projects, so that I remember, Patrice, you're worth this. They're not just having you here because there's nothing to do. You deserve to be here. You add value, and you deserve the extra money to do this work.
I love that idea. How do you kind of incorporate that in a world, if a boss on the other side of the table says, Yeah, I know you have done amazing work. We really value you. We really appreciate you. But times are tough right now. There was a big shutdown. There was a big drop off in spending. And so therefore our business just isn't what it used to be. Hang tight. We'll figure something out. What do you say to that, Patrice?
Yeah, I also it's still important to articulate it. I think that what happens is we have these conversations in our mind and we determine what the boss may say before we've even gotten to the table, right? So that may be the response, but we should still be our greatest advocate. And so if your boss understands, wow, this person is taking on more responsibility in the midst of all these things, even if I can't do it today, let's set a plan in motion so that 6 months from now, we're very clear about what the expectation is of this raise or promotion from both ends, right? So it's not that, you may not get it, but building the muscle to start advocating for yourself, you can't beat that. You need that in this season or the next. You're always going to need to have that skill. So why not start now?
Start now, start the binder now, start advocating for yourself now. All of that is great advice. I really like the brag binder idea. Kind of getting more to the personal finance side of things and real estate, Brittany, you mentioned that earlier. What are your thoughts on buying a new house? The person asking the question says, we're a new family, we're currently renting. I'm assuming they have seen some of the same headlines that I have, and I'm sure many of our viewers have, about the housing market being incredibly tight right now. But of course, mortgage rates very low. What would you advise to this person who is, considering really making a more permanent move with regard to real estate? Brittany.
Yeah, I would encourage it, but also be realistic about what's happening in the real estate market, and then always start with your own personal, financial situation. So anytime you're looking to buy property, let's say it's your primary residence, your first time home, look at your budget and cash flow and make sure you have an understanding of how much mortgage or home costs you could realistically afford every month. I mean, in the rules of financial planning, we say no more than 28% of your income per month should be going towards housing costs. Now, if you live in a big city like LA, New York, San Francisco, it's maybe going to be a little bit more, but that's a personal decision. You have to run the numbers with, your significant other, or hopefully if you're working with a financial planner, to figure out what is doable where you're not stretched too thin. Nobody wants to be house poor, meaning you buy too much home. Even if you qualify for a loan at a certain level, maybe when you translate that into your budget breakdown, that mortgage payment is a little too tight where you wouldn't be able to save for other goals that you have, or you would just feel very stressed in terms of the amount you need to make. So start with that, run the numbers, and of course, get the pre-approval, see what kind of loans you qualify for, figure out where the down payment's going to come. I mean, the real estate right now, it's a lot of a cash buying still, a lot of 20% down payments required. A lot of times people are putting an offer in and there's multiple offers. We're talking 15, 20 offers, and they're offering over asking price. So I think, set the expectation and work with a solid realtor who knows the market that you're looking at buying in, and can really prep you and negotiate for you. I think that's such an important factor with the real estate market right now, is working with the right people who can go in there and negotiate, keep you level-headed about what the reality is, because it might not just happen in month one. It might take 6 months, a year. So kind of make sure you're prepared for the process. But I definitely encourage it, as soon as you feel comfortable financially with your cash flow, with stable income, to start looking at property. What we saw last year was actually a lot of people buying in different locations. So for example, I'm in LA. They might still choose to rent in LA, but buy a property in a different location, more rural area, that was affordable, cheaper price point than an LA home, and they could go, maybe enjoy it, but then also rent it out during the year and have some sort of cash flow. So there's a lot of creative solutions to getting real estate, and I think it's just a matter of what is it that you want most right now, and start with that, and then just kind of put the game plan in place and get the right people to help you execute it.
Do you think it's a mistake to buy into this very hot market? I mean, we all lived through 2008. We saw what happened when people bought at the peak. Is it the same this time around? Should people maybe, sit on the sidelines for a bit, wait for things to cool off? Or do you think there are still ways to make a purchase in the current environment, Brittany?
It's such a tricky question. Actually, I ask this all my realtor friends every time I talk to them. And I think look, nobody has a crystal ball. This economic landscape that we're in now, though, is different than the housing crisis in 2008, 2009. I mean, it is a completely different thing. Yes, I understand that, a lot of people were out of jobs last year, or there's these rent freezes where, you can't technically kick out tenants right now. So there's factors obviously affecting the real estate market. You mentioned low interest rates on mortgages. Personally, I think when it comes to buying property, like a real estate especially, you want to think of it long term. So it's more about what is right for you, right? Mm-hmm. So it could be a low interest rate environment, right, but maybe it's ultimately not right for you to force a house purchase because you have other things that you got to work on in your financial life. Like Carolyn was saying, maybe you have to build your emergency fund, or maybe you need to get the stable income before you take on another major expense, because no one wants to get into a home and then 2 years from now have this stress of I can't pay the payment, So I think it's more about personal financial planning is personal, right? What is your personal situation? Mm-hmm. What is right for you? Yes, there are economic factors that we always want to jump in on opportunities if it's there. But, give yourself that break to say, you know what, I'm going to do it thoughtfully because I'd rather do it smart, even if it takes a little bit longer, even if the interest rates are a little bit higher, so that I know I get in this property and I could hold it long term.
That's great advice, because you're right. There is no crystal ball. There's no way to know when, if, the market cools down at all. So, it's all important to be doing what's best for each individual here. So while we're talking about making big money decisions or even small money decisions, let's talk about who handles the finances. I know you all have heard from many women that their husbands take control and they don't know very many of the details. So if their partner were to become incapacitated, they wouldn't even know where to start. Carolyn, you've heard this from your clients. Why do you think it is such a big problem? Why do you think it is that it's typically the husband that does take control among the clients that you're speaking with?
Well, first off, it's actually, I've seen both ways where the wife takes care of everything, the husband has no clue. So it's really not sex dependent, but in general, men do tend to take control of finances more than women. Now, in our firm, when we have clients where one of the partners has no clue about what's going on, we make it our mission to make sure they understand at least the basics. So we go through what we call a triage process of making sure they understand where all the money is and how to access it. And we have them do what we call yearly audits. And I actually do this with my husband. Believe it or not, my husband takes care of all our finances, even me being the financial planner. And every year I make sure I know how to log into our different accounts and I know where things are and how to pay the bills. And then next, how are things invested? And some people have absolutely no interest in investing. And I tell those people, it's okay to not understand the nuts and bolts, but you've got to understand the big picture. How much of your money is safe that can be used for short-term needs and emergencies? How much is invested for the long term? And to at least understand what a stock or a mutual fund is or what bonds are and fixed income are. So we do have this basic primer of education so that if their spouse is ever sidelined from either illness or death, that they know they're going to be okay. And I've had clients, and so this is actually a big part of what I teach other advisors, because I speak at a lot of conferences, is I have clients that will be newly diagnosed with an illness, and we check in periodically to make sure that they're actually learning how to do the bill pay. And we actually will teach them how to do the bill pay and all that if the person is too sick to be able to deal with it. So don't let it go. I mean, the other thing you see, and this is really sad, sometimes men are controlling of the finances and they're siphoning off money somewhere for a future divorce, and that ends up being a mess. I encourage all couples early on, before they even get married, to make sure they're open with their finances and that they have a plan for how finances are going to be handled going forward.
That sounds like a really great place to start. Patrice, what have you heard from your clients on this front?
I was just thinking as Carolyn was speaking, is the other side of this coin is financial abuse. Sometimes we're not familiar with the term. And so we think, oh, so-and-so just likes the money and they like numbers. So I just stay to the background and I trust that everything is okay. But many times money is used to manipulate. Money is weaponized. And so we also have to just make more people, but women in particular, just aware that financial abuse is a real thing. And you could be experiencing that if you are not privy to any of the numbers. If you have been told just trust that all things are going to work out for your good, don't worry about it, I got it, and you don't know how to log in to those accounts as Carolyn shared, or you've never seen a policy, you've never seen any documents. As a matter of fact, maybe you're told to just have a small amount in your account and money is put there and you can go to the store or buy clothes or grocery shop. Like it's controlled, so you only know a small fraction of what's going on. You may be suffering from financial abuse. And if that's the case, I think that as financial leaders or experts or whatever we're called these days, we have to talk more about that, because I've been in situations where I used to counsel couples and, one person, it would come to find out that one person was really hiding money and doing things, and they resisted coming to counseling because they knew it would come out, right? And so we have to be really diligent about those conversations. And I'll tell you, in my house, my husband and I do Money Mondays. Every single Monday, 9 a.m. Eastern, we sit down for about 45 minutes to an hour, and we talk about unexpected purchases coming up. We address our financial goals, what money is going towards those goals, what are we moving around, maybe in some of our investing. I let him know about what deals I have on the table for my business. He does the same, just to make sure there's complete transparency. But we didn't start out that way. So, we're married 13 years now. That's been a practice maybe the last 3 years. Honestly, the first few years, it was tough to have these conversations, and many couples experience that. And I just really want to suggest that we start to be more transparent about having these conversations, and not from a place of pointing fingers. So I'm not saying log off and go say, are you financially abusing me? So I just want to be clear. Don't say that. Some people maybe just think that you're not interested and therefore they don't divulge, but there is a small group of people who are being financially abused, and maybe others just feel like you don't even care. So maybe it's starting with a conversation that's like, hey, I don't want this to all be on you. And heaven forbid something happened to you. I don't want to grieve while I'm confused, right? Like, I don't want to be confused while I'm already in the process of grieving. So why don't we come up with a system where once a quarter or biannually, whatever it is, right, where we can really talk about these things just to make sure that we're both on the same page. But it starts with a conversation.
Yeah, I like the idea of Money Monday. It's just to constantly be checking in. Brittany, what would you advise for couples who are, trying to wrap their head around finances? Do you think it should be perfectly equitable, that they both know and are making decisions about where the money is invested? Or do you think it makes sense for one person to really take charge and kind of spearhead the allocation of their family finances?
Yeah, well, I mean, like both of the ladies said, I think it's going to be whatever works for like the couple, but having this open conversation is key. Like Patrice, I like to do weekly money dates where I think couples, this is such a good way to come together, talk, like she just gave such a good examples, talk about what's going on in the financial life. And if you're new to the conversation, I would just say, start by asking each other like discovery questions. How the money story is what we call it. How did you grow up with money? What are some of the things you've learned, through your life about money, whether it was school, parents, family, society, and how are those things shaping how you think, feel, and behave with money today? And just have an open, honest conversation with your partner, because when you really start with that and get an understanding around why someone might be doing the things that they're doing, you can have more understanding and compassion and find ways, like Patrice was saying, to work together moving forward. So I always think, like, in couples, it's never perfect. Like, there's never two people who are exactly the same. I mean, that's not a reality. So why do we expect in our relationships to have this other person think exactly the same or behave exactly the same with money? It's not real. So understand each other, understand maybe someone has a strength or weakness because of particular things in their past, and maybe they're working through those, to change it now. But in the meantime, you can come together like a partnership. I always think it's like, as a partnership, you want to say, oh, you're better at saving, you're better at setting up systems, so why don't you take care of those things? But like Carolyn was saying, still understand the big picture of what's happening, or vice versa. Maybe I'm better at investing, maybe I'm better at understanding the risks, so I'm going to be kind of more of the lead person on those things, like investment portfolio, real estate, that sort of thing. But still come together weekly, have the conversation so each other's very in the know. It's just like any partnership. You really want to be honest, communicate regularly. It's not always going to be easy. Sometimes you're going to have challenges or fight, and that's part of it. That's part of life. But commit to like working through it and continue to enhance it or refine it as you go through life. But I think just like playing up each other's strengths, helping each other and be more understanding and compassionate with each other's maybe weaknesses is such a valuable way to think about money as a couple.
And know those passwords, where the money is and how to actually access it, which is a good reminder to me that I actually don't know the answer to the password questions. So thank you. I am taking that away, and I am going to apply that in my own life. So thank you three for that advice on that front. This is just kind of switching gears more to the investing side of things. This person would like to start investing and trading. Any how-tos on that front, Carolyn? How do you just start? What do you do?
Well, there's a difference between investing and trading. And for an individual, I don't recommend trading at all. And I can tell a sordid story of when I was a young, brash person who thought they knew everything. This was in the late 90s. I'm older than all of you. I thought I was brilliant, especially being a doctor. Doctors always think they're brilliant at everything. And I've learned a lot since then, just so you know. I'm a lot more humble now, I think. But I tried day trading back in the 90s, and man, it was more stressful than somebody dying in front of me with a heart attack. I could handle that better as a doctor than I could day trading and trading. So first off, I don't recommend anybody do trading unless they just a little bit of money and they're doing it for fun. Now, investing is a totally different story. You should start investing young and doing as much as you comfortably can, starting, of course, with things like your 401k to get the match, and then the Roth IRA. And when you just have a little bit of money, it's most important to be in a broad-based diversified portfolio, so an index mutual fund. And as your assets grow, then you can start parsing it out into things like international funds, small cap funds. And I still, though, highly believe in using passive index funds because the costs are low. The two things you can control about your portfolio are the cost of the portfolio and how tax efficient it is. And index funds tend to be both tax efficient and have low costs. Now, once you start getting more money where you can put more money in a brokerage account that's not in a retirement plan, then you can get fancier, but it's important to still make sure you're being tax efficient because some assets work really well in tax efficient accounts and some don't. And all along the way, and we said this earlier, is understand the goal of your money. That's the number one most important thing when investing that you have to decide. Money should be the tool, not the object. And so as you're investing, know what your goals are. Is it to reach financial independence? Is it to buy a house? Short-term goals, all that money should be conservatively invested. Long-term goals, you can take a lot more risk with, especially if you're young. And then my last piece of advice is for that long-term stuff, don't look at it every day. Learn to just keep socking that money away, and the market's going to go up and down. Don't react. Create this investment policy that says, okay, maybe I'm 80% risky assets, 20% safe assets. And when the market crashes, that means you should be buying more stock to get up that allocation again. So don't be a herd follower. And so when the market's doing poorly, don't jump out. And when the market's doing great, don't just then decide to invest. It needs to happen along the way.
But do tune into CNBC, of course, if you are interested in what the market is doing on a day-to-day basis. So we have obviously covered we have covered a lot this hour. So I want to get some final thoughts from each of you. Anything that we haven't discussed that you'd like to mention, or any final piece of advice for our audience, Brittany?
Yeah, I would just say, I've talked about financial education for 15 years, and I think one of the silver linings of last year was that a lot of people had the awareness of, oh, I really am in charge of my own financial future. And at any given moment, things can change around me. But if I have the tools and resources, I can shift and make pivots to seize opportunities. So I think now more than ever, financial education is so incredibly important, and it's really up to everybody. No more victim, no more I didn't learn it growing up, no one taught me in school. It's now as an adult saying, I need to find the resources, whether it's a book, a class online, watching, financial shows, whatever it might be, to learn what I need to learn and commit to the lifelong learning. I'm a CFP. I've been in the business 15 years. I've talked to thousands of people, and I'm still learning every single day. And I come from a beginner's mindset with finance and life in general, but there's so much to learn. And once you kind of just get your feet wet, start learning one subject, then go on to the next, and then just continue. And I think financial education is such also a great thing to pass down as generational wealth or legacy. I've heard this term a lot over the last year as well, generational wealth. I think everybody is aware that, okay, not only is it up to me, but I want to be able to create something where I could pass it down to my children or the next generation. And financial education, I think Patrice said it, Carolyn said it, it's so valuable. Teach your kids about money. They learn by experience. They learn by you. Even just having conversations around it, whether it's not based in fear or stress, it is so valuable. And that actually can be the best legacy you leave behind as a financial education to your next generation. So I'm a big believer in it. And I think now more than ever, everybody is responsible for their own future. And it doesn't have to be scary, but take the first step and then just keep taking steps.
I agree with you, Brittany. One of the best parts about studying finance, learning finance, is that there is just an insatiable, hole of things you can learn on a day-to-day basis. Patrice, what are some of your final thoughts that you'd like to share with our audience today?
I would say just to remember, for me, that the definition of wealth is not just money and material possessions. It's really the condition of well-being. And so sometimes we get so stressed out about what account do I choose? What do I invest in? What's the best budgeting app? And we just allow ourselves to stay stuck in these cycles of confusion, when really there may be other areas of our lives that we need to address and kind of remove some clutter. So if there is a conversation with a family member or loved one where you need to start saying no, you got to buckle down and get comfortable having that uncomfortable conversation, right? Or if you were just in a space that no longer serves you, you know that it's time for you to leave the job or move to a new industry or do that thing that you've been so afraid to do. You have no idea how that really impacts your ability to make clear financial decisions. And so if you're feeling stuck in money, I really want to invite you to take a look at some of the other areas of your life that may be the catalyst for you being stuck. Because again, as Brittany shared, there are so many resources to help you with the basics of personal finance, but we can't always see it and we can't always receive it, not because we're not quote unquote money people, but because there's other parts of our lives that are just really blocking us from being able to really move forward powerfully. And so I know it's a little different than your traditional money advice, but it's all connected. Our lives are so connected. We've learned that over this last year. And so when you're feeling stuck with money, I invite you to take a look around at some other areas, in particular relationships in your life.
Right. The definition of wealth is not numerical. Wealth is what you make it. Carolyn, what would you share as your final thoughts today?
So Brittany and Patrice just said some very valuable tools and things, and I just want to add to that. It's so important for you to take care of yourself first and be a consistent saver. So women in particular are so good at taking care of everybody else, and sometimes to their detriment. So make sure you're setting money aside, automatically saving, and then think very thoughtfully about how you spend your money. I think too many people get caught up in this consumer economy where you buy more stuff. And stuff is expensive to own, it's expensive to buy, expensive to keep up. So the toys, the cars, the boats, the extra houses or whatever, that make sure that that's really bringing value to your life. Studies have actually shown that you get more joy out of money when you use it for experience. So taking trips, being with friends, doing dinners, which I can't wait till we can get back to all that. And so just be real thoughtful about how you spend your money, and then keep it all simple. I think people try to do all these crazy things with money, like we talked about already, the trading or trying to invest in exotic assets. I mean, things like, you hear a lot of things like Bitcoin, real estate. Should I do this? Should I do that? The people who keep it simple and who consistently save, who create a nice investment policy for themselves and stick with it, are over the long term the people who do so much better than to try to do all the complicated things. So, and that way you can spend more time enjoying your life too.
Goes back to that whole, broader wealth conversation that we're having.
Right.
Thank you all so much for being here. I'm afraid we are out of time today. Patrice Washington, Dr. Carolyn McClanahan, and Brittany Castro, thank you three for being here and sharing so much invaluable advice with us today. This Facebook Live is produced in partnership with Acorns, the micro-investing app. As a reminder, NBC Universal and Comcast Ventures are investors in Acorns. Thank you all for tuning in. I'm Leslie Picker. Have a great day.